Hello everyone, and welcome to this presentation of how to trade pullbacks in volatile markets. Now in today's presentation, I'm going to show you examples such as this where someone could look and say, well, there really is no real clear definitive way of deciding which direction this stock, future, or currency pair may be going. In this case, we have a stock. But after you see the technique I'm going to be sharing with you, you'll see that a buy signal actually was generated here and followed by some very nice gains. So I'll teach you how to look for that and how to spot things like that in just a brief moment, and more gains along the way. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you are new to my website or our webinars that we give on a weekly basis, just let me put it out there that first and foremost, we are an educational company. We're a little bit different from all the other presentations you may be viewing in the past because our sole focus is on educating you, the trader, so that you can ultimately make your own trading decisions. You see, it's our philosophy at Specialist Trading that the reason why most traders fail is because you're relying on someone or something to tell you what to do. I mean, think about it. Look at your own trading. Do you go to a chat room every day to find out what to buy or sell, or do you wait for a nightly signal service? Or are you waiting for some news to tell you if you should go long or short or exit a position, or possibly listening to someone on TV? This is the way most traders fail, myself included. When I first started trading, I traded this way for the first year or so of my trading, and I couldn't make a dime of this because I was relying on an outside source to tell me what to do. It wasn't until my mentors took me aside. These were traders on the trading floor. I started out my career almost 4 decades ago on the trading floor of the Pacific Stock Exchange. They saw how much I was struggling, and so they turned my way of trading around and ultimately gave me the tips and techniques I needed to sustain me so that I could be trading for nearly 40 years. So this is what we do at Specialist Trading. All the things I've accumulated in nearly 40 years of trading, the things I was taught that helped my trading turn around, I teach to my personal students and to my members of Specialist Trading as well. So we are first and foremost an educational company giving you the tools, insights, wisdom, and trading strategies you need in order for you to make your own trading decisions. Now, as I said, I'm going to teach you what I feel is the best way to trade pullbacks in volatile markets. But before we begin, as always, I ask that you please take a moment to view our disclaimer. We are required to show you this. So as you can see here, I'm going to be showing you a lot of performance results. I'm going to show you a lot of different charts, tons of charts actually. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I would also, if you haven't done so already, like to invite each and every one of you to follow us on Twitter. I post free information on a daily basis, anywhere from signals that have been generated by our strategies to actual little tidbits of wisdom along the way. So you may want to copy down our handle there at SPCLSTTRADG, and feel free to follow us on Twitter. All right, here's what you're going to learn today. Once again, this is a classroom, so it's going to be conducted like a classroom, and so I'm going to actually be teaching you things that you can start using as early as today if you like. But the only thing we ask is that, firstly, you please paper trade these techniques for a while so that you really understand them and get them under your belt. I can almost assure you that if you just jump right in without really studying them or researching, even though they're simple, you'll most likely lose money because basically this is what most traders do. They jump in way too quickly before they really understand the process. Now also what I'm going to be talking about is a lot of things to learn that you can apply, but more importantly, since this is a classroom, I love your questions. If you do happen to have any questions, kindly wait till the very end of the presentation, just in about 30 minutes from now, and then I'll take all the questions that you have, okay? If you are having technical difficulties, kindly log off and then log back on again. Maybe sometimes that will help it. But I will answer this question, which is probably the most popular. Is this being recorded? Yes, it is. So if you can't see the screen or if you're having difficulties hearing, you can go to Pro Trader Strategies and they will send you a link to this recording, okay? So if you just joined us, please wait till the very end of the presentation to ask any questions. All right, let's begin. Here's what I'm going to be teaching you today. We're going to be talking firstly how most people trade pullbacks, myself included. This is the way I was taught. And then I'm going to share with you a simple but high probability technique for trading pullbacks in all markets and time frames. So even though we may have more of a focus on stocks in this presentation, trust me, it can be applied to anything. You can be using it on futures, currency pairs, commodities. It really doesn't matter. Let's just give a brief refresher course on how most people trade pullbacks. And In order to trade any type of a pullback, you need a trend. Now, here is just a perfect scenario of what an uptrend looks like. It's kind of a stair-step approach, okay? You see you have these nice upward moves, then a downward move, and that is called your pullback because you're simply pulling back in a longer-term uptrend, and then the trend resumes to the upside. Now, the same thing happens in a downtrend. You just reverse the process. You're going lower. You have a little snapback to the upside or a rally, and that's where you want to sell, and this is where the trend resumes lower, okay? Seems very simple on paper. This is the way it should work. Now, unfortunately, this is the way it usually happens. You'll maybe get 1 or 2 good trades under your belt, but then, all right, the same scenario happens again where you have the same parameters where you had a pullback here and you want to buy, okay? So it worked out perfectly, right? Now, you get another scenario, meets the same exact parameters, so then you think, okay, I'm going to jump in and buy right here because it worked before, right? So I should buy on this pullback, just like this one as well, all right? You see the nice pullback to the downside. So you jump in and you decide, well, the parameters have been met. We went down the same exact distance. Let's say you're looking at Fibonacci retracements. Let's say you're looking at support and resistance. Let's say you're looking at Elliott wave. But whatever you're using, it meets all the requirements. So you say, I'm going to jump in and buy here, and it goes lower, okay? Same thing happens in a downtrend. It meets all the qualifications, all the requirements. So you jump in to sell, and it goes higher. That look or sound familiar to anyone when you're trading pullbacks. The minute you get in, it just keeps going the opposite direction. Most likely you're stopped out with a loss. Here's a perfect example of how that looks like in support and resistance. I know a lot of people like to use support and resistance as their measurement for trading pullbacks. As we see here, here's a perfect case scenario for support and resistance, very similar to that chart we just showed you. We have basic support on the first pullback. The rally continues, then you pull back again. The rally continues. Now this time you're looking for another pullback back to this area of support. So you're saying, okay, I'm going to jump in and buy here. So let's say you jump in and buy, and look what happens. It didn't stop at the first support. It doesn't even stop at the major support, okay? How about Fibonacci levels? All right, you can use those as well. Every once in a while they will work. The most common way to pick some type of retracement is at a 50% retracement, meaning that you have a move to the downside, and then when you bounce up roughly 50% of that downward move from the top to the bottom, that's where you should sell. So you sell here based on that, and it works pretty well. All right, works like magic. So now you want to do it again. Now you have a larger move. You're waiting for this stock to bounce up half the distance. So you sell again, and this time you think you're licking your chops, thinking, boy, it's going to go down all this way. I'll have 2 good winners, and it goes straight up. You see, there's no consistency in this type of trading. Entering a trade based off support and resistance or Fibonacci levels or any other of the conventional ways in which we've been taught is similar to picking tops and bottoms. Now, these are extremely difficult techniques to master because they are very subjective. I mean, think about it. Let's say you're watching support and resistance. I can't tell you how many times I've looked at a chart and thought that there's support at a certain level, and I'll talk to another trader and they say, no, that's not support, it's somewhere else. This is actually resistance. Or even with a Fibonacci level, they'll not see the same thing. They're too subjective, all right? Now, in order to have a high probability pullback entry, one must wait for confirmation that the pullback has concluded and that the market is headed back in your desired direction. So you see, we want to confirm that we've either stopped going up or going down, and that way we can get back in. But usually with trading any type of pullback, you're basically just trying to pick a top or a bottom and hoping that it stops at these levels and then resumes its trend. So let me show you what I mean. Here's the concept that we're going to be teaching you today. Rather than just blindly buy because it meets all the parameters of support and resistance or Fibonacci or some indicator you're using, rather than just blindly buy and say, okay, I hope it stops here, wait for confirmation. Wait for it to move and to start going in the direction that you want it to before you jump in. And then, even though you're not going to get the bottom of the move, that's okay. You will have a higher probability trade, you'll jump in, and most likely it will continue in that direction. It's the same thing to the downtrend. Rather than just say, okay, well, it stopped at these same parameters before, at the same percentage point or at the same Fibonacci level, forget about those things, because once again, in my nearly 40 years of trading, there's no consistency in those things. They work very well sometimes, and then they stop working altogether. So rather than try and hope and pray that they stop at these levels, Wait for a confirmation that it's going to continue, and that's your signal to jump on board. That's when you sell, and most likely the trend, you'll have a higher probability that the trend continues in your direction. So this is what we're going to be basing our pullbacks off of. We're not going to simply pick a level based off some indicator or some convoluted logic. We're going to just simply have confirmation that it's going in our desired direction. Similar to seeing a train leaving the train station, it's going in our direction, then we jump on board once it's starting to go forward. All right, with that said, here are the types of confirmation that you can start using as early as today. All right, they all have a high level of consistency. In fact, we use a couple of these in some of our trading strategies. First of all, you can wait for a price to trade above or below the previous bar. So let's say it gets to a certain point where you say, well, Steve, I've always been trained, at this certain support or resistance, this is where I'm supposed to buy. Well, rather than just hope and pray it stops there, wait for the price to trade of the next bar to trade above that bar. That will at least confirm that it's going in your desired direction. You can also use a candlestick pattern. All right, candlestick patterns are designed for some type of reversal. All right, so many times that will be your key, your confirmation that you are reversing. And then lastly, you can use an indicator, an overbought, oversold type of oscillator that oftentimes tells you you've gotten oversold or overbought, and you can jump on in because the trend is now resuming in your desired direction. Let's look at these three examples at this generic chart. All right, here's a pullback to the downside. Now, if we just tried to hope and pray and hope that it stopped here, we would have lost money. All right, so we're looking for confirmation. One confirmation could be that we trade above the previous bar. Let's say that we generated a buy setup right here. Rather than just blindly buy at the market, wait for the next bar to trade above this bar. That's where you're going to be entering. You're not going to be entering on the close or put a lower limit. You're going to enter once it trades 1 or 2 ticks above. That's your confirmation that it's going in that direction. All right. You can also look for a candlestick pattern. This is a bullish engulfing pattern, a very popular, common reversal pattern. When it's traded within the realm of the trend, it's very, very high probability type of setup. So this is telling you most likely that you may be stopping here. You can also use this and purchase not only at the market, but wait for it to also trade above that bar. So you can combine the two techniques. And then lastly, once again, you can use an overbought, oversold tool. This is just your standard slow stochastic. You see here that this entire time we've been in the oversold area. Had you just simply bought the minute it went into the oversold, you would have most likely been stopped out because it continued to go lower and lower. But you wait for it to pop back up above the oversold, and that's your continuation process. Okay, so these are all nice different ways to make sure that you're confirming, and as you can see here, they all worked perfectly with this pullback scenario. Okay, once again, we're not just going to simply place an order at a level hoping and praying that it stops there. That's a recipe for a disaster. All right, I just showed you some examples where it doesn't work that way. We want to have confirmation. Now, I just gave you 3, once again, that you can start using as early as today. Do they work well? Sure. They have a certain level of consistency. Are they the best? No, absolutely not. I mean, I'm not going to tell you that these types of confirmation are going to work every time. They're much better than simply placing a limit order and hoping that price stops there. But they're still not the best. And so what I want to teach you today is what I have seen in nearly 40 years of trading to be the best confirmation tool for getting me in pullback trades. I continue to use it to this day. In fact, I used it this morning, and I just want to share with you exactly what it is. It is the correct way to trade pullbacks, and that is by applying the PET-D. We call it the PET-D because it's a formula that I was taught on the floor, but now we've changed it into a color bar tool, so we've named it the Primo Early Trend Detector, or the PET-D. So it's a proprietary color bar algorithm. Once again, I was taught this roughly 40 years ago on the floor, but we had to do this by hand. That's how antiquated things were then. And so we couldn't apply it for intraday trading because it was just too difficult. By the time you figured out the formula for the next bar, it was time to figure out the formula for the next bar. So with the advent of high-speed computers and programmers, we've been able to make it a proprietary color bar algorithm. So there's nothing you have to calculate, nothing you have to formulate. You simply have to look at the color of the bar. Now, if you have a series of green bars, guess what? The short-term trend is up. If you have a series of red bars, the short-term trend is down. It's that simple. So there's nothing you have to do to figure out what the short-term trend is. You don't have to look at a higher time frame to find out what the lower one is doing. You don't have to have tons of indicators crossing to make sure you're in sync. You simply have to apply the PAT-D. Now here's how we're going to apply it by trading pullbacks. And this, in my opinion, is the best way to trade pullbacks. Once again, I was using it this morning on 5-minute bars of the EMini Futures. Now, in an uptrend, you're going to have a small amount of red bars. They're going to appear. Okay, remember, an uptrend is all green bars usually. But from time to time, you will have a small series of red bars. This is simply the pullback. This is the counter trend. Now, the next green bar, or the first green bar that occurs after that series of red bars, is your confirmation that the pullback has concluded. And that's your setup to get in. So if we look at this older chart of Facebook, we see here that all of the bars are green coming into this nice little rally here, okay? And as we start to sell off, we have 3 or 4 red bars, okay? So this is not, someone would say, well, Steve, doesn't this tell us that the trend now has changed to down? It tells us that the short-term trend has changed to down. The overall trend is still up, which we teach you in our courses how to define what the overall trend is. But the short-term trend is just down. So we wait for the first green bar to appear. Now, if one never appears, then we turn into a full-fledged downtrend. But if we do get one and we're still in an overall uptrend, that's our buy setup. Okay, it's that simple. There's nothing you have to wait for, no support and resistance, no Fibonacci, no Elliott wave. It's just look for the first green bar, and then look what happened. Okay, it was that simple. Now we're just going to reverse the process if we're selling in a downtrend or if we're selling a pullback in a downtrend. Now in a downtrend, most of the bars will be red, but from time to time you'll see a small amount of green bars. This does not mean that the trend has changed. It simply means that in the overall downtrend, we have a snapback or a rally to the upside. This is our pullback, okay? Now all we have to do is wait for the first red bar to occur. That's our confirmation that the pullback has concluded and the train has left the station in our direction. It's time to jump on board. So as we see here in this 5-minute chart of the E-mini, the majority of the bars are red. Now we have a series of 4 green bars. Does this mean that the trend is now up? No, because our tool for telling what the overall trend is still down. So this is just a pullback. All we have to do is wait for the first red bar, which appears right here. That's our signal that the pullback has concluded. Time to get on board, and we sell. And look what happens. Market goes lower. Now we have another pullback taking place. Someone would say, well, this is the bottom, right? Now the trend is changing. No, the overall trend is still down. We just have a small pullback to the upside. Here's our first red bar again. So we sell again. Okay. Once again, we have one green bar followed by a red bar. Sell again. And you see how simple this is. See, trading is really simple when you're in sync with the trend, short term and overall. All you have to do is just jump on board. It's just that we overcomplicate our trading by looking at all these convoluted indicators, listening to news, going to chat rooms, listening and applying all these different things and putting them on our plate. And then at the end of the day, we have no idea what to do because it's too complicated. And I'm saying this from firsthand experience because that's the way I used to trade. My first year or two, I traded exactly that way, using all the things I've been taught. I'm sure you've gone to webinars and seminars, and I was using all those same things, Fibonacci, support and resistance, volume, institutions, and none of them was working. So it wasn't until I simplified my trading by using these techniques that I started to get on board with consistent trading. And I really feel that these are the things that have allowed me to sustain my trading for nearly 4 decades. All right, so let's look at some more examples and we'll show you how simple this is. Let's look at PX right here. Okay, someone looking at this would say, well, Steve, there really is no trend. Well, actually there is. We're in an overall uptrend. The majority of the bars are green. And here is our pullback. We have a series of red bars. Now we're looking for the first green bar. All we have to do is wait for the first green bar. We don't have to look to any news. We don't have to listen to anyone on TV or go to any chat rooms. Trading is simple. We just wait for the first green bar. And there it is. So that's our clue that the pullback has concluded. We jump on board and buy PX, and stock goes up 6 points in the next 2 weeks. Okay? How about VLO? Okay, the overall trend is down. Once we add the PAT-D, we see that it colors all the bars and the short-term trend is down. So they're in sync until this point right here. The overall trend is down, but the short-term trend turns green. So this just is telling us this is the pullback. This is the rally phase. All we have to do is wait for the first down red bar, and that's our setup to go short. We sell 7 points in the next month. Okay? How about SWK? Obviously, we're in an uptrend, but we need the PET D to tell us when to get in. So we apply the PET D. A lot of people say, well, Steve, there's a lot of resistance here. You know, I don't want to trade this. We don't care about those things. We just look at the PET D. It's telling us the majority of the bars are green. So we don't care about where so-called resistance is. You know, the resistance is made to be broken. We find the first red bar. We wait for the first green bar. Okay, that's our setup to get in. Someone looking at resistance would say, oh, I'm not going to buy that because there's too much resistance. I looked at this report last night. All of the institutions are selling there. So this is what I mean, how we make trading more difficult than it has to be. I stopped looking at those reports 30, 40 years ago. All I do is just look at the color of the bars. There was a buy setup and 8 points in the next month. Okay. There was another setup. If you missed that one, there was the second pullback. You could have jumped in and got another 2 or 3 points to the upside. How about HRL? Okay, where we're going down, but it looks like we're bottoming out. All right, someone looking at this would say, well, Steve, the institutions or volume picked up. This obviously is some type of a bottom. The stock's trying to rally back to those old highs. And this is nice uptrend right here. We're making higher highs and higher lows. So everything I've been taught tells me we're in an uptrend now. Well, the way we were taught is we look at the PET D. The majority of the bars are red. Okay, they were red all the way up here. Before you even had the drop in price, the PET D was telling you you were in a short-term downtrend. So you could have avoided all of this, waited for the pullback right here, and all you have to do is simply wait for the first red bar, which is right here. All right. Someone would say, well, no, I'm going to buy because we're in a nice uptrend. Higher lows. Okay, this is probably another low. We're going to bottom out and go up here. Nope. If you learn how to listen to the market instead of listening to these methods that really show no consistency, you'll get much more in sync with what you're trading. So this is our sell setup, and the stock fell 5 points in the next week. All right, EFX. Someone looking at this will say, well, there's not enough information to tell me what the trend is. I have no idea. Well, actually there is. The majority of the bars are green. We only have one red bar. Now, if we continue to have a large series of red bars and our overall trend tool tells us that the trend has changed, well, sure, then we'll say, okay, this is obviously not a buy setup. We should look to go short on a pullback to the upside. But right now, the overall trend is up. We just have 1 day of pullback here. We want to wait for the next green bar, which is the very next day. Okay, so a pullback can be 1 day according to the PET D. And that's our setup to go long. You could have purchased EFX and 8 points in the next 2 or 3 weeks. Now, obviously, this is an expensive stock. We're not saying that you have to purchase the stock. You could have easily purchased options, long calls, or some type of spread or option strategy you wanted to use that was had a bias for this going higher. So we're not saying you have to buy stock. However you decide to do it, we have a number of members who only trade options using this technique. Now, someone looking at this once again would say, Steve, there's not enough information. By the way, the chat room I go to is really bullish on this because we have a nice little double bottom here and there's a lot of support. And once the earnings come out, they're supposed to be really good. And we're going to go long this stock because it's really fundamentally sound. The guy I follow in a trading room really likes this. And once it gets a little lower to that support, we're going to purchase a lot of stock here. Okay. You see how complicated trading is and how you're relying on an outside source to tell you what to do? I didn't hear any mention of the actual market. It was all about what people are thinking or what institutions or volume is doing. The PET D is simply a translator. It's translating what the market wants to do. Our only job is simply to jump on board. So what is the PET D translating to the market wants to do? Well, the majority of the bars are red. Our overall trend identifier says that we're in a downtrend, and these last 3 green bars are simply a pullback to the upside. So the trend is really down. We're waiting for the first red bar, which is right here, and so all we have to do is sell. There's no support, there's no institutions buying or no double bottoms. The market is telling you it wants to go lower. So all you have to do is jump on board. That's our only job as a trader, to jump on board. And it fell 15 points in the next couple of months, okay? All because the market wanted to go lower. It's us who complicate things by trying to overanalyze it. And there were also a couple of more pullback sell signals later on if you happen to miss that one. Pepsi, okay, PEP. Once again, how could we define this? Well, you simply look at the PET-D. The majority bars are green. We have two red bars signaling a pullback, but we have to wait for the first green bar, which appears on the very next day. Our setup to go long, and there's another one. Nothing really much happens, even though we're still long. We haven't got stopped out of this. We're still long in the trade, and then we buy more if we'd like to, and that's when it finally kicked in. So this example is just to show you that not often they're all going to take off and be perfect. The minute you buy, they're going to go direction. But sometimes you have to wait a little bit for them to, germinate there. And so oftentimes it'll take you maybe a couple of days or a week until the process starts to go. Looking at STX, once again, this is very similar to KORS. Someone could say, well, here's a double bottom, Steve. That's where the volume picked up, and that means somebody is buying there. It must be the big institutions or big market house. We had the PET-D, and the PET-D is telling us, no, that stuff, there's no consistency in that. The market wants to go lower. I'm translating what the market wants, and the market says it wants to go lower. So all we have to do is wait for confirmation. What's the confirmation? The first red bar right here. All right, so that's your confirmation before anything has happened that this is most likely going lower. So you just simply sell. Once again, you could purchase puts. You could purchase a shorting strategy. You could sell calls, and the stock falls 15 points. Now, obviously, there was some news that caused this to gap down and then go much, much lower, all right? Did we know of that? No, but the PET-D knew that we were in a downtrend this entire time because the majority of bars were red. So this is, once again, this is the only thing you should be listening to. My mentor said, Steve, forget about all these newsletters you have and all these seminars you go to. Just listen to the market. The market tells you about 90–95% of the time what it wants to do in advance. The only trouble is we're wasting our time listening to some guy in a trading room, listening to some guy on TV, listening to earnings. Those are a waste of time. Listen to the market. It tells you what to do, okay? The only trouble is most of us don't know how to listen to the market. That's the beauty of the PET-D. It translates what the market wants to do for us. And once again, if you missed the first one, don't worry. Oftentimes, if it's a strong enough pullback, they'll give you a second chance to go short. DNB, once again, hardly any information. Someone looking at this would say, I don't know what this is doing, Steve. There's not enough info. Well, there's probably some major resistance there. So how could I buy this? It looks like we're just going sideways, right? So if you apply the PET-D, the majority of bars are green. And once again, remember, if you came in late, we'll only take and answer questions at the very end of the presentation, about 15 minutes, okay? So once again, if we apply this, we see that the overall trend is up according to our proprietary tool, and the PET-D, the short-term trend, is up. So this is just simply a pullback, not just one-day pullback. There's our confirmation that the trend has resumed to the upside. So that's our setup to go long, and the stock goes up 21 points. Did we have any idea it was going to go up this high? Absolutely not. And so, it's up to you to make your own decisions as to where you want to get out. But this setup just gave you 21 points to work with in the next month. Now, you could have exited with a 1-point gain. You could have exited with a 10, 15, 20-point gain. It's up to you. We teach you different variables and different ways in which to exit, but it's your choice. Remember, the only way one becomes consistent in trading is by making your own trading decisions. You'll hear me say that over and over again, but trust me, this is what turned my trading around. This is what I'm trying to instill in all of my students. So we give you the tools and the knowledge, and then after we've mentored and worked with you, then ultimately it's up to you to decide how many points you want to take, where you want to get in, okay, where you want to place your stop. And once again, you never have to worry if you missed it, because oftentimes you'll get a second chance. Here's the second pullback, okay, after that second red bar. Google, here's a perfect example here. Last year, going up, had a 2-day pullback, 2 red bars, 1 green bar, 100 points to the upside the next month. Once again, obviously some news came out where it gapped up. It's funny how the PET-D knew to be long well back here before that happened. And a second chance as well here if you happen to miss this big move. Here's a weekly chart. I know a lot of people like to trade different time frames. Just to share with you that this doesn't just need to be applied on daily bars for stocks. It works in any market, any time frame, any direction. So don't think just because we're showing you stocks here on daily bars that it's the only thing it works with. It doesn't matter. It doesn't matter if you trade tick charts. It doesn't matter if you trade monthly bars. Here's a weekly chart of when. Obviously, looking back in hindsight, this is in a major downtrend coming into this year. Now, someone could say, well, yeah, Steve, what's so difficult about this? I mean, it's easy to see that we've been in a downtrend. But wouldn't you have liked to know well back here a couple of years ago that it was in a downtrend, going to be in a major downtrend on a weekly time frame? Well, if you had applied the PET-D, you would have known well back here that you were in a downtrend. And look at all the different sell spots you could have had to go short, okay, on a weekly time frame. That's 125 points in roughly about a year. Now, we know that not everyone likes to go short. So let's say this was in your portfolio and you were long this. Well, don't you think this would have given you an incentive to at least get out of the stock when you saw all these red bars? You could have saved yourself a good 100 points by using the PET-D at least to get you out. Now I want to show you this. This is an older example here, but I just want to show you how the PET-D oftentimes will tell you in advance of news. In fact, this was actually about a year ago this month. Now the stock market dove 1,000 points in early trading. If you remember back in August of last year, the stock market had plummeted at the opening today with the Dow Jones Industrial Average losing more than 1,000 points or 6%. Wall Street had been bracing for a rough day after the markets plunged again in China amid growing fears about China's slowing economy. So that's the story everyone's going with. Well, it was China that happened. This came out of the blue. China had a bad couple of days, so it transferred over onto our markets. And so, what can I do? It's I'm a leaf at the mercy of the wind. I can't control what's going on in China. So that's why I lost money, because the market fell out of bed because what's going on in China. You see, this is the way most traders trade. Once again, this is the way I used to trade. There's always somebody or something to blame. It's not my fault because I really didn't know what's going on, and I got caught in China's sell-off. Okay, but once you know how to listen to the market, as I said earlier, the market usually tells you in advance what it wants to do. So you never have to be a victim or play the victim game. I'm not going to say that it guarantees 100% winners, but at least you'll know that you're wrong many times in advance, and you'll get out with a small loss and be able to recoup it very quickly. Let me show you what I mean here. So that was last year, last August. And this is what happened. As we can see here, intraday, the market was down roughly 1,000 points. Isn't it funny, though, that going back a month earlier, the bars were already red. So you already knew well in advance that we were in a downtrend. You also knew that you had one up day here followed by a red day. So that was your signal to go short on that pullback. If you didn't take that one, the market gave you a second chance on the second pullback to go short. You had two signals. Two chances here on the Dow Jones. This is the DIA, this is the ETF for the Dow. But you had two setups here to go short. One on the 11th, a full week or so in front of that downward move, and then another one on the 19th. Remember, victims are just people who don't know how to trade in sync with the market. It's another way of saying, I'm out of sync with the market. I don't know what the market wants to do. I'm doing the opposite of it. That's why I'm losing money. But once you're in sync with the market and you know how to listen to it, oftentimes you won't have to play that victim game. You'll have a lot more consistency. So there were so many traders I heard saying, well, Steve, I guess your methods didn't work. You guys, probably all your students or everyone in your courses probably lost a lot of money. I said, no, if they follow this one course, they would have gained a lot of money and gotten short weeks in advance. So these are perfect examples of how well this technique works. That's why I said I'm going to be sharing with you what I feel is the best way to trade pullbacks in volatile markets. All right, so let's recap. I taught you a simple but high probability technique for trading pullbacks in volatile markets. Now ask yourself, and ask yourself honestly, do you think this edge could have helped your trading this past year? Go back and look at your last 10 or 20 trades. I can almost guarantee you that you were out of sync with the market with most of your losses if you had losses. You were buying when the market was in a downtrend, and you were selling when the market was in an uptrend. Most likely because you went to some chat room or some trading room, or you followed some signal service where you trusted and believed that it was going to work for you, or you have some system that you don't know what it's based off of, but you just blindly enter orders because it's supposed to work, right? I know because I was there. When I was going through the same difficulty nearly 40 years ago, I was trading systems, I was doing all the things I had been taught, and nothing was working. Remember, we are an educational company. We're not sitting here telling you we have the best strategies, the best systems that work 100% of the time, that generates thousands and thousands of percent. We don't believe in that. We don't have statistics because we feel everyone should trade their own way. And everyone does trade their own way at specialist trading. We give you the format, the tools you need to get on that road to consistency, but everyone decides if they want to trade conservatively, if they want to trade aggressively. We give you a number of entry points, a number of exit points. So there's absolutely no way to keep statistics on all this because everyone trades differently, trade different time frames, different markets, different entry points, different stop placements. And that's the way it should be. You should never follow something or try to emulate how someone else is trading. Okay? I tried to do that when I was starting out and it didn't work. So let's take it from someone who's been there. Now here's the special we're going to be giving to all the attendees today. And this is really dramatically reduced. I don't realize how much this is discounted for all the attendees. It's our summer special. It's the PET-D. This is our Primo Early Trend Detector, as we call it, a roadmap for any market. We're giving you the course here, okay? Now this course, once again, it comes with proprietary color bar algorithm and includes the add-on, so it colors your bars are the green or red. It also comes with 2 continuation trading techniques as well as 2 pullback trading techniques, a trailing stop technique, and you have you can apply this once again to any market, and mentoring correspondence with myself, okay? Just to show you how this works in other markets. I know a lot of you say, well, Steve, I don't trade stocks. Well, let's look at crude oil, okay? This is crude oil coming into June. As we can see here, we are in an overall uptrend. The majority of bars are green. We have just a pullback here. A lot of people thought crude oil was going much lower. Actually, it was just setting up for another buy, all right? Crude oil went higher. Another one-day pullback, and then it resumes its run, okay? How about a monthly chart of 30-year bonds? Exact same technique. There's nothing we have to change because we're looking at bonds, looking at stocks, looking at futures. Absolutely nothing changes. We're in an overall uptrend. These are all monthly bars. The majority of bars are green. We have 2 months of pullback here. Our very first green bar tells us that bonds are going higher, and look what happened, okay? Remember, we're not interested in fundamental news. We don't care about interest rates or economic conditions. We only listen to the market. Keep trading simple. That's how you get to that road to consistency. I made markets in over 50 stocks when I was on the floor of the stock exchange. I was a specialist, meaning I had to make markets for 50 stocks that I traded. I never once looked at any news event concerning them. I didn't know the earnings. I didn't know what they were doing. I didn't have to because I had learned these techniques. So if I was a trader on the floor and didn't concern myself with news or earnings or things of that nature, why should you have to? Now here's a 10-minute chart of the EMini Futures, okay? Nothing changes because we're looking at a 10-minute time frame. The overall trend is down. We have 4 bars here of an uptrend, but that's just simply the pullback to the upside. Here's our first bar turning red. That tells us that the confirmation is in place. So we go short, quick 18 points to the downside, okay? That's $900 per contract. How about a 5-minute time frame? Well, obviously this day we were going much, much higher. So the overall trend was up as well as the short-term trend. We start to sell off, and here are our first red bars. That tells us this is a pullback. We have a pullback in place. All right, all we have to do is wait for the first green bar, which happens right here. This is a 5-minute time frame, and 8 points in the next hour or two, okay? $400 per contract, followed by another setup as well. How about a weekly chart of the Canadian dollar? The same process. We're not going to change anything. The majority of the bars are green. The overall trend is up. We have 2 red bars, followed by the first green bar. That's our confirmation. Time to get in. Canadian dollar goes up 1,400 pips in the next 6 months, about $14,000 per contract. So you see, in any market, any time frame, any direction, really doesn't matter what you trade. Here's a daily chart of the dollar yen. A pullback to the upside. Now all we have to do is sell on the first green bar, and there's 500 pips on the daily bar, okay? So that all comes included with the PET-D, okay? But we're not stopping there. I know a lot of people say, well, Steve, you know, I still need a little bit more structure. I know this is just technique. You haven't talked about stop placement, about exits, about money management, about, entry points. Well, here's what we're doing. The PET-D usually runs for $29.95. What we're doing is slashing this price dramatically. It doesn't cost $29.95. we're going to reduce the price dramatically down to $4.97 with a $97 month payment. And on top of that, we're including one of our best strategies to date. That's strategy number 4. So you're getting what we call our dynamic duo. We have so many people in this dynamic duo course because they said it's the first time that's increased their odds for consistency. We have traders who have told us they've been trading for years, and now with this dynamic duo of the PET D and strategy 4, they've finally become consistent. Now these two together usually cost thousands of dollars. We're dropping this price, a one-time fee of $4.97 plus $97 per month. But since it's reduced dramatically, down from thousands of dollars, this is only going to last for the next couple of days. Okay, it's only going to be for a couple of days, and then it goes back up to those thousands of dollars, and the limited access for the PET D is roughly $3,000. So here's how to take advantage of this, okay? Once again, Pro Trader Strategies is my sister site. They handle all of my courses, my marketing, and the selling of my courses. And they're the ones to contact if you want to get that great discounted deal, okay? There's their email address, trading@protraderstrategies.com. If you'd like to set up that $4.97 plus a $97 account payable every month, well, then you can contact them directly at 310-598-67. And you see the link below that will automatically take you to that deep 2-day discounted offer, but that's not a live link. So you have to go to the chat box on the far right. You'll see that they've posted the live link there under the chat box. All you have to do is simply click that on. It will take you to the live link. If you're having any technical difficulties or it doesn't take you there, just contact Pro Trader Strategies. You can do the same deal over the phone or through the email process. Probably be the best thing to contact them over the phone. Okay, but remember, the original price for the PET D is $3,000. We're giving you the PET D plus strategy number 4, probably our most consistent strategy today, for only a small payment of $4.97 plus $97 a month. Okay, so that's a great deal right there. But the reason why it's so great, it only lasts for the next couple of days. So you have to take advantage of that. Okay, now I'm going to leave all this information up so you can look at it and contact Pro Trader Strategies while I open up the question and answer page. And thank you so much for waiting. We have the last 10-15 minutes for any questions that you may have, okay? Danny asked, Mr. Primo, does this work only on daily bars? No, it doesn't. You may have come in a little bit late, but as you saw here, it works on any market, any time frame, any direction, okay? There's nothing you have to worry about as if you trade only tick bars or if you trade monthly bars, and you can apply it just as well, okay? Let's see, Nick. Hello, Nick. Nick is a good student of ours, and he's been to many of our webinars. He says, Steve, using the PET D, does the first green bar after retracement have to be hollow? First of all, before I go into the second part of your question, no, it doesn't. All the bar has to be is green. It does not matter if it's an up day. It could be a down day. Most likely, it will be an up day, but it doesn't have to be. Remember, we're only looking for the color of the bar. We're not caring where it closes. We're not caring at what part of the bar it closes. We just want to see that that first green bar is there, and then we can go in. Now, we have aggressive traders who like to say, okay, 5 minutes before that, or let's say it's a 10-minute bar. A few seconds before that bar closes, it will be green. Most likely it's not going to change. So they'll buy on the close. We also have more conservative traders that say, well, I will wait for the next day to buy or the next bar to buy. We have others who say, well, I will wait for it to trade above that, okay? So there's a number of different ways. That's why we don't keep stats, because there are different ways to enter. All we want to do is wait for confirmation, though. That's what the PET D does, because the PET D is not a system. It's not a trading strategy. It's the early trend detector. It's probably the best trend detector I know, because it's translating tick for tick what the market wants to do. And so, I don't want people to think that this is a trading system. It is simply a finely tuned trend detector. It oftentimes tells the trend well in advance of any other indicator I've ever seen, okay? Nick is also saying, and does the first red bar after retracement have to be solid for this method? No, it doesn't. Okay, so in other words, we are not concerned with whether, you're looking at candlesticks, whether it's an open or high or low close, what type of bar it is, but we're not concerned with where it closes. We don't, or if it's hollow or empty or whatever. That's not our concern. The only thing we're concerned is the color of the bar. Then once we see that, then we have to go to our course material and decide, okay, how am I going to enter now? Which technique that Steve has taught me am I going to use as an entry technique, okay? Okay, let's see. Naru is asking, how do we use this information to trade options, as in strike price, expiration, all of that information? Well, first, Naru, remember, this is not an option course. So we have Eric Wilkinson, who teaches a lot of option courses here for pro trader strategies, and that's probably something that you can get through his courses. All this is telling you is that the pullback has concluded. Now it's time to get in. So how am I going to decide to get in? Many of our traders say, all right, I'll just simply purchase puts if it's a pullback to the downside, or they'll say I'll purchase calls. Now how you decide to do that, once again, is what I stated in the first opening sentence. We want you to make your own decision. You know, we're not going to tell you, well, here's the correct volatility that you need to enter, or here is the correct strike price. That should be up to you. You should know that already, because this is not an option course. So you should know in advance, if you already trade options, which one you want to get and which one works best. This is not a system. This is just a finely tuned entry technique for trading pullbacks, okay? Remember, we do not want to say this is the only way to trade options and this is how you do it, okay? Follow this each and every time. That is a recipe for disaster, and it goes entirely against our philosophy. That's why we don't have one perfect way to trade our strategies. There's a number of different ways. You have to decide what works best for you, okay? Jeffrey says, can you outline the area that we can cut and paste? I'm not sure what you mean. Are you talking about the, if you're talking about this right here, let me just see what, close this little box I have. If you're talking about this right here, this is the outline you have to cut and paste. But if you go to your GoToWebinar column on the far right hand side, you'll see a little area there that says chat. Well, all you have to do is simply go to that chat box there, and there is a live link. So you don't have to cut and paste anything if you don't want to. You can simply go into the chat box. You'll see there a link that has been posted. Just click that on and it will take you to the area. So there's nothing you have to cut and paste. Now this would normally be what you would have to cut and paste, but it's a lot easier simply to go to the GoToWebinar column on the right, look under the chat box, and simply click on that link. If all else fails and you're having difficulty, contact Pro Trader Strategy. Send them an email, or probably the best thing would be to call them directly, and they can set you up with that real deep discount of $497 plus $97 a month. But remember, that's only good for 2 days. Then it goes back to like $3,000 just for the Pet D. That doesn't even include Strategy 4. So if you miss this, say you think about it and you say, okay, well, you know, next week I made my decision. I think I'm going to get that. Well, I'm sorry. You're going to have to pay, I believe it's $600 or $800 for Strategy number 4 and the $3,000 for the Pet Ds. Or we're talking close to $4,000. Well, now we're just talking $497 and $97 a month. Okay, so this is a really great discounted deal for 2 days only, all right? Jeffrey is saying he's on the mobile. There's nothing in the chat box. It should be, I'm not sure how mobile works, Jeffrey. What I would suggest, if you're looking right now, I'm going to, it's hard to highlight because this is a static PowerPoint presentation, but if you're looking at my cursor here, my little arrow, right here in the very bottom, underneath, directly below the phone number is the area you need to copy and paste, okay? It's directly below the phone number if you're on a mobile phone, okay? Once again, the best thing probably if you're having difficulty on a mobile phone is to call that number, 310-598-6677. They can send you a link and you can go there if you'd like, okay? Brad is asking, how long do I have to pay the $97 per month? You know what? That would probably be best since Pro Trader Strategies handles all of that marketing and everything. Like I said, I'm just the educational portion. Contact them and they can do that. They can give you a specific date. I don't know per se. I separate myself from any of the actual costs and stuff. Any discounts or stuff are put together by their programming team. Okay. Any more questions while I have us here? Let's see. Does this work with NinjaTrade? Yes, I'm sorry, Danny. That's a great question. Let me give you the names of the platforms that you can apply this with. Yes, it works perfectly with NinjaTrader. Okay. It also works with TradeStation, MT4, Metastock, Sierra Charts, FXCM, and if you have Thinkorswim, you can also use it, but here's the way it works with Thinkorswim. Because of the way Thinkorswim is formatted, they won't allow us to have the PET D or Strategy 4 on their charts. They want to keep that stuff in-house. So what they've allowed us to do is take their data feed, we can splice it. So while you're using Thinkorswim platform, you can also take that data and apply it to a NinjaTrader platform so that you can use that free data for NinjaTrader, and we set that all up for you. We have a great tech support department. Patricia is in charge of that. She just contacts you, has it usually done in about 15 or 20 minutes, and you can be using a NinjaTrader to see all the setups with PET-D as well as Strategy 4, okay? So it's really great. All those platforms, once again, TradeStation, Metastock, MT4, NinjaTrader, FXCM, Sierra Charts, I think I may have said, and Thinkorswim users can use the data to use on a free NinjaTrader platform. We supply you with all that. We help you set it up. In fact, we do it all for you, no extra charge, okay? Romero is asking, which strategy and what is the cost? Sorry, I just logged in. Okay, let me just go back real quickly for you here. We're going to go back to this page where we have the real special. What you're getting is the PET-D. That's the color bar algorithm, okay? That's our proprietary algorithm based off of momentum. We give you the add-on for your platform that automatically changes the bars green or red so you know when a pullback has concluded. That normally is close to $3,000, but we're not stopping there. We're also throwing in one of our best strategies, strategy number 4. You know, I've been using this on a daily basis as well for nearly 40 years, okay? Now, we're throwing that in for free. Now, we're not just offering this close to $3,000. We're drastically dropping it down for a one-time payment of $497, not even $500, less than $500, $497 one-time payment, and then a monthly fee of $97. That's it, okay? So you can call up to see how long that monthly fee lasts, but this is dramatically reduced, and it's for 2 days only. So it's going to be for today and Thursday. I think Friday it goes back to thousands of dollars again, okay? I personally use these on a daily basis. As I stated, I was using this today. Prior to entering on the webinar, I used this to go short, trading a 5-minute chart of the EMini, and had a nice trade, okay? So this is really simple, but we give you all the information in the course. Once again, let me go back to that page real quickly. If you want to contact Pro Trader Strategies, if you're having difficulty, the live link is on the far right in your chat box. If you'd like to talk to someone, they have a good 10 or 12 consultants now. You can contact any of their trading consultants, and they'll answer any questions that you may have about platforms, about how long the monthly fee is, things of that nature, okay? Danny asks, does this work on sideways market to get in and get out? Well, first of all, let me just tell you, Danny, I'm not going to sit here and tell you that every trade's a winner. I said that a number of times in the presentation. But it's been my experience that the PET-D will keep you out of sideways markets. So in sideways markets, the majority of trading methods, systems, strategies don't do very well because you get whipsawed. So what the PET-D does, as well as strategy number 4, you need to meet all of the requirements before you enter. So many times you won't even have a trade, because it'll keep you out of these whipsaws. I've noticed that that's the beauty of these techniques, that they keep me on the sidelines many times during these sideways markets. So in my opinion, some of the best trades are the ones you don't take because they would have turned into losses. So I'm not going to tell you that every trade works out well, but oftentimes in sideways markets, you won't be trading. You'll be sitting back and waiting for a trend to be established. Remember, a pullback, I showed you in those first couple of slides, in order to have a pullback, you need a trend to be established. Okay, remember I showed you those slides? Well, you don't have a trend established if you're in a sideways market. So it will keep you out of those a lot of times, all right? Let's see, Danny's asking, what about the winning percentage? Remember, Danny, a winning percentage can only be calculated if you trade it the same way every time. That's a statistic. and I've stated a number of times in this presentation, we do not keep statistics because it goes against our philosophy to tell everyone to trade it the same way each and every time. And how could we keep that record? I mean, in what market are you talking about? In what time frame? In what direction? Everyone trades it, and we encourage you to trade it differently. Trade using a conservative approach that we teach you. Trade an aggressive approach. It's up to you. But in order to keep statistics, it has to be a system. That means that regardless of if you're in a sideways choppy market, if you're in a volatile market, or if you're in a quiet market, you have to trade it because it's a system. We don't believe in that. You should be a part of the process. I said that in the very beginning of the presentation. The reason why most traders fail is because you're relying on an outside source to tell you what to do. This outside source is either a ton of indicators, it's either the news or earnings, it's somebody in a chat room, but either way, someone or something is telling you how to trade. We give you the information so that you can ultimately tell yourself how to trade. You make your own decisions. We can't keep stats on what you're deciding how to do, okay? So that's the presentation in a nutshell. I mean, we want you to be in charge and take control of your trading. Trust me, I traded like that my first 2 years. I couldn't make a dime. It wasn't until I finally grasped the concept that I have to take control of my own trading. I can't rely on what the earnings are going to be. I can't rely on what's going on in China. I can't rely on what someone's saying in a chat room. I have to make my own decisions. That's when my trading started to become consistent. So this is the philosophy of specialist trading. This is what we try and instill in all of our students and all of our members. And we have members in virtually every country around the world and in every state in the United States. So, you know, something has to be working when you follow that philosophy, okay? Okay, in conclusion here, I want to thank you so much. Listen, we only have 2 days to take advantage of this deep, deep discount, okay? If you have any questions concerning price or how long you have to pay or a platform, contact Pro Trader Strategies. They have people manning the phones right now, trading consultants. They can answer any of those questions about tech support or price. But remember, in order to take advantage of this, you have to sign up in the next couple of days to get both of those, okay? Remember, if you just wanted to take the Pet D at the standard price, it would cost you close to $3,000. But now we have it with Strategy 4 for a one-time fee of $497 and $97 a month. Okay, I'm really confident that once you become a student of mine and you get all the information provided in the courses, that you really get on that road to consistency. So in conclusion, I want to thank you so much for attending today. I hope you got something out of it. I hope you can apply these techniques I shared with you earlier about confirmation, at least just that philosophy of waiting for a confirmation rather than just simply blindly placing an order and hoping and praying that price stops there, okay? As you take one last look at our disclaimer, I want to thank you so much once again for attending the presentation today, and I look forward to all of you becoming students and members of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.